All right. Hey, everybody. It's Johnny Moe, and I am here with my co-host, this little up-and-coming guy you might have heard of, Tristan Ahumada. And we're here talking with David Childers. David Childers is the mastermind vice president, if I'm not mistaken, correct, from Keeping Current Matters. And we get together every once a month, I guess, and we talk about, this is my favorite thing. Out of everything that LCA puts on, this is one of my favorite things because it is real analytical data to truly help you project for the future what you're going to do or follow trends or see where we're coming from based upon statistics. So, David, welcome.
Thank you. Thank you. I'm excited to be back. You know, we took a few weeks off over the break and excited to be back with both of you. And you know, my goal, you mentioned looking at the data and the insight. My goal is to try to give you as much information as we can in this amount of time so that you are educated about what's happening out in the market and can make a difference with the clients you serve. So excited to be with you.
Excellent. Yes, man. Happy to have you. Doing well. Tristan, you doing well?
I'm happy. What can I say? I'm ready to go.
Let's do it. So this is the first one we're doing of 2021.
Yep.
And 2020 didn't disappoint us with crazy stuff. And 2020 grew up to 2021 now. It's drinking age. So tell us, what do we got? I mean, I know a lot of what you're going to talk about is residual from 2020 because we just don't have that data yet. But what are we looking at, man? What's trending, I guess I would say?
Yeah, I think a couple of things that I pulled and we'll share with you. I think a lot of us are kind of going, okay, what's the market going to look like this year? And you know, we've heard maybe from experts that it's forecasted to be a good market, but give you a little bit of context to that and what that means and ultimately what that could mean going forward for consumers. So brought a few pieces of information there we'll talk about. I think the big question, unemployment came out this morning, stayed the same, 6.7% in this country. And I think a lot of people are going, okay, what's going to happen, you know, with the economic recovery and you know, there's a lot of questions regarding that. The one that impacts us the most in our business is forbearance. So I want to bring you an update there to be able to say, okay, you know, what's going on with that, foreclosures. We've talked a lot about that. If you've been following us and following this, you know, these every couple of months sessions that we do, but I'll give you the latest information there. And then I'm going to say one thing for the end that, you know, maybe to go to you probably know this better than I do, Johnny, being from the Northeast. Are you a hockey guy?
Yeah.
What was the great Wayne Gretzky quote? We want to skate to where?
Skate the puck where the puck is going.
Yeah. So I want to talk a little bit about where's the puck going ultimately with regard to our business in the next year and what do we need to be aware of. So yeah, we'll cover a lot today. So you want to hop right in or anything that's on top of mind for either of you that you want to
Well,
bring
dude,
up?
the number one thing I get all the time over the winter break and into the new year is, are we going to blow up? Is this all going to go down the drain? Because we have, now that we see what happened, especially what we see what happened in Georgia, where now the Senate is going to be Democratic over Republican. How is that going to affect the interest rates? How is that going to affect the real estate market? Is it going to affect it? What are the things that are into play here?
Sure.
So that honestly, that's the question I've gotten over the last few days a lot, right?
Sure. You know, I think there's more to come on that story, Tristan. I don't think anybody has a crystal ball. There are certainly folks different political persuasions. You know, if maybe you're on that side of the aisle, you're excited. If you're not, you're not excited. So that's the reality of the world we live in. Mm-hmm. I think there are a couple of things that we know right now. One, the market is expecting more stimulus. Okay, that's the general feeling, is that there will be more stimulus in the market, and that will spur the economy forward. Now, what we have to look out for there is inflation driving rates higher. Now, the overall outlook for interest rates is they will rise. Now, is that going to be next month, the month after that, 12 months from now? We don't know. And in trying to forecast that, I had a mentor in our business say one time, trying to catch the lowest rates, like trying to stomp on a cockroach in your kitchen at midnight with all the lights off. It's just you can't do it. It's going to continue to grow and rise, as we move throughout the year. That's one of the things I'll bring at the end is the outlook there. But one thing I want to preface that conversation with. Go ahead, Tristan.
Who told you that quote, man? I love that quote. That's a good quote.
You guys know Jim McMahon, who's
that sounds like a Johnny Moe quote, something he would text me, and then I'd laugh.
Yeah, Jim told me that. But let me be clear on something about that. There are a lot of questions right now. There are no economists, no leaders in our business calling for the wheels to come off the tracks. So if that's your question, I think you can confidently answer that we see no one saying that right now. Okay, so I think that probably has a little bit more to do with how you feel about things than what the actual facts are. And so I want to try to stick to facts in what we talk about. Now, there's many more things to come and how the housing market will be impacted or affected this year, and we'll answer those as they come up. But would it be good if I hopped into some slides and let's talk about what's going on this year? So I'm going to start with one here. It's a quote from Frank Martell, who's the CEO of CoreLogic, and he says this: "The housing market performed remarkably well in 2020 despite the volatile economic state." Okay, we all know that. While we can expect to see lingering effects of COVID-19 resurgences and subsequent shutdowns in the early months of 2021. Vaccine distribution and stimulus action should revitalize economic activity. There are opinions on that, but more money in the economy should revitalize economic activity and keep home purchase demand and home price growth strong. I want to pause for just a second. When people say what's coming, let's answer it this way. We saw what 2020 gave us, and our market grew. We shut down the country for a couple of months, and we sold homes through that. So I would just level set. What'd you say, Johnny?
A lot of homes.
Yeah, a lot of homes, more than we did the prior year.
Yeah.
So the market forecast and what's going to happen, while we don't know everything that's going to happen with the virus and all that, if it were to perform like it did this past year when we shut the country down, we exceeded. And there are many forecasters calling for us to exceed the number of transactions this year is what we had in 2020, and I'll bring that to you in just a minute. So let me hop back in, show you a couple of things. Home price forecast. We have here, a survey of several different folks: NAR, Ivy, Zelman, Realtor.com, CoreLogic, Freddie, Fannie, and MBA. The average of all these forecasts is just over 4.1%. Now, when we talk about price, it's all about supply and demand. Experts are expecting this in the year. Demand to stay relatively strong, very strong. People saying we have clarity on what we want in a home now. That's different than what it was before. We know what our work situation is. That's becoming clearer. And very clearly, experts expect more supply to come on the market. And actually, that's going to happen more so in the second half of the year. And I'm going to talk about that in just a minute. Think about the number of...
Before you talk about that supply thing.
What about it?
Before you talk about the supply thing, I saw somebody share something. I didn't delve into it because I'm not doing too much social media news feed these days because it's just junk. But I saw something that I don't know if it's fake news. Don't know if you've heard about anything. Are there any plans? This was Gavin Newsom in particular in California. I don't, Tristan, maybe you know more about this because I'm not familiar with what's going on out there. But they said that government wants to start, don't worry about the forbear properties or anybody that is potential losing. The government's going to buy those properties. Have you heard anything like that? Government buying properties.
You asking Tristan or I?
I'm asking you first because you see stuff coming from all over the place. And if
I don't know the impact of that, but I did, Johnny, see an article to say that was proposed. I don't know if that's been passed or what it was, but I did hear something about that.
How do you think that would impact? Because there's a lot of investors out there with a lot of money chomping at the bit to buy these properties at the same time. So, how would you see something like that? Or is it just too hypothetical at this point?
Well, it is a little too hypothetical to address, but here's where it doesn't make sense to me. we do not have a demand problem in real estate. We have a supply problem. So from the onset of the question, I don't understand it. So I understand the question you're asking, but I don't see where there would be a need for that, I guess is my point.
Okay, excellent. Just wanted, because we're talking about that forbearance kind of coming and supply coming. So I just wanted to throw that out there because some people have been asking me about that. I'm just not versed to have that conversation.
Totally. Yeah. Well, again, I would go back to, do we have a supply problem? I mean, do we have a demand problem wherever you're at?
Not at
And if
all.
you're like, no, we don't, we have a supply problem, then I don't see why anybody would propose that as a solution to what? It's not a solution to any problem that I know of.
Mm-hmm. Gotcha.
Let me show you real quick, just transaction-wise, what experts are saying. You can see this from Fannie, NAR, and MBA. Their 2020 estimates where we'll end up and what they're projecting for 2021, outside of the nuance of the differences in numbers there. Each one of these forecasters is calling for more transactions this year than what we had last year, which was more than the year prior. And oh, by the way, last year was the, predominantly in the pandemic weighing on every single one of us. And, as we get through 2021, I think that hopefully is going to become clearer and we're going to begin to move through that. But forecasters are calling for more homes to sell this year than last year, which arguably last year was a great year for real estate in this country. So I think when we go back to that question you asked, Tristan, these forecasters, these economists, these experts all understand what's happening in the world, the administration, the economy, and they're still forecasting more transactions going into this year.
These numbers, do they have new construction calculated in with them, or is that traditional?
We do look at both. Some only do existing homes versus new construction. These are all include both, include new construction and existing homes. Now, sometimes Zillow or Redfin will do just existing homes and not new construction, so I don't have those in there. I will tell you they're calling for more as well, but in an apples-to-apples comparison, what I'm trying to look for are experts and, okay, what are we seeing as consistent themes? And that is more transaction volume this year than last.
Excellent.
I think the one thing I would, as we kind of round this out, let's talk about what that means right now. And this is a very interesting study that just came out. It's a home price expectation survey. We use that at Keeping Current Matters to look at what experts are saying. It's a survey of leading economists and forecasters and people in our business. If someone were to buy an average price home today over the next 5 years, they would accumulate over $50,000 in equity based on what the forecast is for appreciation going forward. Low rates right now are extremely attractive. The possibility and forecast for appreciation is attractive going forward. And so I think it makes it imperative that we share that with folks. And this equity, accumulating $50,000 in equity is real money. And if you were to say, okay, David, what was the moral of the 2020 housing market story? It absolutely was equity. It was equity back and forth. It's helping people get through the challenge they're in if they have to tap their equity to stay afloat economically. It's helping folks not be foreclosed on. We talked extensively about that. And, people outside of the housing crash in 2008, ever since then, they've handled equity differently. And, if there were a silver lining to the housing crisis back then, it would be that it changed people's minds and how they handled the debt in their homes. And it served them very, very well.
Yeah, that's excellent. Let me ask you a question. Do you think, and the reason I'm going to ask this question is back in, I think it was 2011 or 12, a family reunion in Orlando, so whatever that one, they anticipated, we came back, my brokers at the time, they always did a recap, State of the Union, what's going on in our state compared to the national. And, they anticipated back then that we would see whatever the growth number they used, 2.9, 3.2, until about 2019, 2020, and then there was going to be a price correction. That obviously didn't happen. Are we breaking all the norms right now? Do you see that? Do you see what's happening? Because obviously, there's the ebbs and flows, prices go up, come down, but they're projecting going to 2006, which is breaking the 10-year cyclical correction. I mean, are we seeing that?
Yeah, there's a couple things I would answer to that. We've talked about this relative to appreciation. We're a little hotter on appreciation. You know, CoreLogic came out and said that homes appreciated at 7.2% last year. Their most recent survey, it could even go higher, you know, once all the numbers come in. We're higher on appreciation than the historical norm. So we want to watch that. But, you know, I would say this right now, we're undersupply. I go back to that point I made earlier. People still want to buy, and people have a need for homes. I think there was this message back then too, back in, you know, 2010 or 11, that, you know, people did not want to ultimately buy a home and settle down. They wanted to live in the city and live above the, you know, the pizzeria and live this life. And we're just not seeing that play out. We're seeing people say, we want to buy homes. And if anything, 2020 gave us was more people saying, you know what, I want to live in a home. I want to live, you know, in my own place for a number of different reasons. And oh, by the way, fuel that with the lowest interest rates we've seen in this country, and we've seen that just, you know, catapult demand. But yeah, certainly, if you were to look at that, Johnny, from statistically, should we be going up and down like that? We're you know, beyond that.
Yeah. Okay.
And I don't think a reason to say, okay, is the market going to correct, just simply to say, well, it should, right? I mean, that's I understand that, but I think it's one that is probably not looking at all the situations and all the facts relative to what's happening in U.S. real estate.
Excellent. Thank you.
Any other questions in there, Tristan? I saw you replying to somebody in there.
Yes, Wendy had a good question just on Johnny Moe's comment earlier on. If the government buys homes, they could control how they resell them versus investors buying them, flipping them, and making tons of money reselling them. I just wanted to reaffirm that statement that you had, that although it's in the news, it doesn't make any logical sense for us to be even talking about something like that, because the market doesn't call for that right now. Everything is selling quickly. We're not only are the interest rates low, but the inventory is dramatically lower than I've ever seen it. So it doesn't make sense.
Yeah.
The only logical play I could see there is the same that I see fund companies doing, is they're buying and holding for the appreciation, right? But yeah. I just think I don't see that on the government side doing that.
Yeah, so that trend of buy and hold was very big, you know, post-housing crisis. It hasn't been as big of a trend. I'll tell you a trend that's happening, and I've seen a couple of them, and it's very interesting, is developers and these hedge fund companies building entire neighborhoods that are rental neighborhoods. I don't know if either one of you have seen that, but that is growing. And saying, hey, you want a single family home, but you want to rent it, and you know, that's a play obviously to build equity and do all that, but also it's a rental play. So I think we'll see, but I don't see the where that solves any problem of the, you know, so-called, you know, government buying homes.
David, I have a question. How does inflation play into the next year or two from what you're seeing?
Well, I think that the market's clearly looking for more stimulus. Okay, and we've heard that, like that's on its way. When you add more supply to the market, what happens? Okay, you're going to push prices up. Here's what happened this year. We put more supply in the market, and most businesses had to cut back. So you had, you had more demand because of stimulus, but businesses cut back on supply due to COVID and how they were operating. So you're going to see inflation kick in. Inflation is the enemy of the bond market. Let's understand that. As inflation rises, that's going to impact interest rates. Now, what the dynamic is, the government is literally pinning rates down by buying those mortgage-backed securities. Also, don't forget, in the secondary market, mortgage-backed securities right now are a very, very attractive investment. Why is that? Because every economist, every forecaster is saying it's going to be a hot housing market next year, and nobody's calling for any depreciation. So I think it will have an impact, and I don't know when. I don't get anywhere near forecasting rates, but eventually the rates will start to trend up.
I agree with you, and I think it has some to do as well, David, with once the government starts getting a hold of some type of normalcy again, right? You're going to start them seeing now, okay, got it. Now let's work on this, because there's a lot going on right now, right? So I think once they get going with that, we'll start seeing everything else fall into play as well. So I have a question for you, and I'm not sure if you've tried it, but have you tried Clubhouse yet, David?
I've seen you guys on there. I've seen everything going around there. I have not. I'm willing to.
Okay, because
I need an invite from somebody. I don't know how to get one.
David, you have an iPhone, right?
I do.
All right, so download the app when you're done, and then it'll notify anybody that has you on their contact list that also
like
has
you have me.
Yeah. So it'll notify me, and I'll bring you in, or somebody else may do it before. And then what we can do is we can plan like a 30-minute talk. And I think we could pack that room with a few hundred people if we title it something along the lines of predicting the housing market in 2021.
Yeah, no, I'm happy to hop in there.
Johnny Moe, you're going to have to get on too then. That would be fun.
I'm on, bro. I don't go on. I'm on. I don't go.
That's what I mean. You're going to have to be on.
Yeah, I'll be on.
Yeah, no, we'll absolutely do that. Let me talk about one area we have to serve people. Okay, let me hop into that, and I think we're talking about for a minute in forbearance. This is the most up-to-date graphic for the number of mortgages that are in active forbearance. We've seen that over the last few weeks slowly rise. 2.8 million people in active forbearance right now. It was around 2.75 just a few weeks ago. Seeing a couple more people come into that and that tick up. I will tell you the percentage of overall number of mortgages in forbearance has remained the same there. So we're going to continue to watch it at Keeping Current Matters and see where this is going. But we do have our first look from the Home Price Expectation Survey. Now, I talked about that, this survey of economists of what happens when these people come out of forbearance. Very interesting, and I want to talk to you about that for just a minute. And so this slide right here shows, it says, for each of the following possible post-forbearance outcomes, what percentage of these 2.7 million homeowners do you estimate will, and I just said 2.8, this was done a week or two before that, 2.7, 58% will resume their mortgage payment, stay in their home at least one year. It's not going to affect them. That's 1.5 million people. 24% in the green right there will list their home within 1 year of exiting forbearance. Okay, so think about these people that went into forbearance. Maybe they went into a workout, they went into something to remain in their home, and maybe you're still having economic challenges. And within a year, say, you know what, we need to downsize, or we can't afford this home, and we're going to put it on the market. 648,000 people. Okay, I just want to pause on that. It's a major reason we need to continue to talk about forbearance. There's an opportunity to help those people. Okay. The next chunk of people, 18% in the red there, will receive a foreclosure notice within 1 year of exiting forbearance. A couple of things there. It says within 1 year and after exiting forbearance. People will be exiting forbearance throughout the year this year. That's not all at once. And the key word there is they will receive a notice. Now, 486,000 people, that's 500,000 people. That's a lot of people right there. I want to talk about that for just a minute. Going back to what we talked about in the lack of supply in the market, the reality is that inventory, if it all came to market quickly, would be absorbed by the market. Also, what they're saying in the Home Price Expectation Survey is they will receive a notice. I'll say a couple of things about the environment we're in right now. I don't see banks right now hopping on the opportunity to foreclose someone, just in the environment we're in, okay? Second thing is, we know there's a lot of equity in homes across the country. A lot of people are going to, potentially get to that point, and they're going to put their home on the market. They can still do something. Now, I think that's important to remember, because we need to continue to talk about this, and there's an opportunity to help individuals, help families weather this financial storm as we go through the next, I'm going to call it 2 years, as people exit forbearance and, start to get, things figured out financially. Can we continue to stay in the home? Do we need to sell? Are we in a situation where we stay in the bank is saying, you know what, we've got to make a decision on this? So I think it's a huge opportunity that's coming up to what we need to do.
All right. That is excellent stuff. And I hope you all picked up on some of those nuggets he just said in the slides before. And at the end of everything, I like to give my nuggets of things that I've picked up differently. I think a little different than most people. And when we're ready, what you just said is so powerful. I think the opportunity here for agents is position yourself, just like I did at the short sale time back in 2005 and 6, as a forbearance expert. Talk with your legal people, your lawyer, CPA, mortgage, financial planner. Have the answers or have access to the answers. Because you need to, there's 1.5 million of you all doing the same thing. But if you're the only person that is the forbearance expert or the short sale expert or the foreclosure expert, and I got legal people, and you can start a video series with these people, put it out on your Explore My Town page, shameless plug, or out on your YouTube or your Facebook page or wherever you can put it out there, and you put yourself out there as the expert, you'll attract people. I mean, the numbers that you shared were big numbers, so that opportunity exists. Right. Also understand, I would go to, I can't remember where it is, but if you Google how money walks, how money moves, you can see, like in Florida, when I did my study down there, the population was going to grow by like 6 million people over the next 10 years, right? Well, who's moving there? Are they moving out of your area? Position yourself as a professional that can handle relocation. Hey, we're listing up here in Cook County, Illinois, which is one of the fastest moving counties, and we're going to help you transition down in Florida, right? Or in Arizona or Idaho, wherever you might be going. So what are the trends of your specific area? And this is stuff that you guys provide, right? For specific states and things like that.
We stay at the macro level, macro US numbers, you know what I mean? But exactly that site, How Money Walks, going into the MLS, seeing what's happening and bringing the local data to what we do. We bring it to everybody. You know, if you want information like this, we do it for $29 a month at keepingcurrentmatters.com. I'd say go grab it at least for the front end of this year, so you have all that information as you're talking to folks.
And people want to talk to educated folks. We're going to wind this down. I got to jump on a 2 o'clock meeting as well. We're all pegged for time these days, right? But you want to be educated. People want to talk, at least in my area, right? That I live in an affluent town. If I'm going to list a high-priced home, you better know what you're talking about. You better have a little bit of knowledge, because you're dealing with people that are maybe a little bit more sophisticated, right? But when you have this data and people are going to ask you the difficult questions, and you can say, well, according to the research of a company that I subscribe to, is going to happen, and the index is a and this is and the trend is this, they're going to trust and like you because you know what you're talking about. Otherwise, you're just talking. Here, case in point, I saw somebody on Clubhouse. They posted on Facebook. My friend just got the pitch Grant Cardone. You better know what the heck you're going to say before you even get that opportunity, and have practiced it 1,500 times. So it just comes out like that, right? And it's the same thing with the data that you provide. You better be able to understand in this. A lot of agents are just trying to be reactionary to get the sale to the next one. But when you can position yourself as a knowledgeable expert, that's where that 1% starts to come to fruition, right?
Totally. Absolutely. And now more than ever, I always say this, we ended our KCM webinars, you know, we say now more than ever, keeping current matters, and people having access to information that they can trust is you know, more important now than ever.
Yep. And Irma, keeping current matters, David's going to plug his website right now as we say goodbye. How do they find you?
You can go to keepingcurrentmatters.com or trykcm.com, trykcm.com, and find everything there. If you need me, you can email me at david@keepingcurrentmatters.com. Always here to help and answer any questions, and love everybody at LabCoat, and grateful for, you know, getting a chance just to share and be with you, Johnny, every couple of weeks or so. Looking forward to doing it more.
I spent $30 on Chinese pork chops from the butcher the other day. Y'all can spend $30 a month to get the data that you need to elevate your position. So
absolutely.
Hey everybody, we're winding down. I just want to, David, thank you. Everybody be safe out there. keep your head on a swivel and keep your business moving forward, because you know what? I anticipate being here for another 100 years doing the same thing. And you're going to be here too. We're going to be talking about some awesome stuff. We'll see you in a couple more weeks, and we'll take a look at what's happening then.
Absolutely. Take care, Johnny. Thank you. Have a great Friday afternoon.
Peace out, everybody.
Bye.